Hello, this is Matt on the Moon Lambeau channel. When it comes to technical analysts, none of them are going to be 100% correct, and that shouldn't even be a goal, frankly, because when you're talking about any chart analyst, it's about probability of outcomes. And so what is probable to happen will not occur 100% of the time. So even if the analyst is correct in suspecting this is what's most probable for X number of events, it's not going to be the case that, if you let that play out for an infinite amount of time, that what is probable will occur. Sometimes the improbable occurs. So for me, it's more about who's more correct, who's more frequently more correct than incorrect. That's what I'm looking for. And I want to share with you in this video, one of the analysts that I follow, I'd call him a top shelf analyst, in fact. He's made calls years in advance. And there's less clarity when you make calls years in advance, but the general expectation is what's important to me. And then it evolves and molds and shifts a little bit over time. But some of these bigger calls, like to this point, some of it's playing out so far. And so the more time passes, the more clarity we all have. And it's interesting to see over the last few years who's been right in a general sense and who's been wrong. And so this analyst in particular is talking about expectation for longer market cycles and has cited evidence previously. And this analyst also does believe, and I've highlighted this on the channel many times, that XRP is going to hit a bare minimum of $10 this market cycle, but more likely $20 to $30 is where the peak will be at some point before this market cycle ends. So I want to share with you some of his thoughts from that. And also, I got a couple articles I want to share about parts of it with. There's this from the Daily Huddle. Are Bitcoin whales buying the dip? On-chain analyst Will Clemente says new trend emerging for large Bitcoin investors. And so I'm going to highlight this, even if briefly, just to point out what I've been pointing out for some time, which is that there's no shortage of evidence that despite a very scared retail investor population, the whales out there and the institutional money and the venture capitalists, there's all the evidence in the world that these participants in the space are not behaving like you'd expect them to behave in a true market, which is to say they're putting money in the space currently. And I'm just going to share with you data. It's one thing to consider. You can consider technical analysis, you can consider fundamental analysis, and also on-chain analytics. I think it's worth looking at all three, with fundamental analysis being the least important in 2022, specifically because this is an immature asset class that does not sufficiently appreciate real-world utility. That's going to change in the future, I believe, but we're not there yet. And then there's also this. This is from Bloomberg. Goldman says crypto mainstream acceptance may not boost prices. And it's just one of those things where I kind of facepalm and audibly sigh, which is the only way to sigh. It's just funny to say it that way. That's what I do as I did as I went through this article. So anyway, plenty to discuss, but before going any further, I do want to be clear, I do not have a financial background of any kind. I'm not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. At the time I'm recording this, XRP is at 62 cents, Bitcoin is at $38,105, market cap for the asset class 1.76 trillion, and Bitcoin dominance at 40.83%. And the crypto fear and greed index, well, price is up a little bit recently anyway, at least at the time that this was last updated. And so market participants a little less scare right now at 29 out of 100 on the crypto fear and greed index, up from 24 out of 100 yesterday, meaning that market participants, the typical retail speculators, were experiencing extreme fear the day before, but now they're just experiencing regular old fear. It's not extreme, it's just fear, which don't make no damn sense because there's so much opportunity in the space endlessly. Here's a tweet from analyst DIY Investing who wrote the following. And he actually shared a thread, which is the one that I was citing, or the analyst wrote. Credible Crypto is the... Let me restart that. Credible Crypto is the analyst I was citing at the intro of the video, and he shared a thread from Credible Crypto on which came from April 3rd, 2020. And so that was retweeted by DIY Investing, another analyst who wrote, "When people bitched at me for saying Credible Crypto was a better analyst than mostly everyone out there, this is the chart I was thinking of in my head. Nobody called this earlier than Credible Crypto, and he deserves the most respect, in my opinion. The Wave Master." And indeed, Credible Crypto, I find him to be a top-shelf analyst. And I'm not going to go through his whole thread. That's not the purpose of this video, but I did want to highlight a couple things of this. And so this thread was from April 3rd, 2020. So at the time, Bitcoin price must have been roughly somewhere around the $6,000 or $7,000 price range. And I remember the sentiment back then, people were not particularly thrilled. And Bitcoin just the month before, it had gotten down to 3,000 and something. And for the cycle, it had gotten as low as, I thought 3,200, and here he wrote 3,100. But anyway, here I will read the first tweet, but I'm not going to go through the whole thread. Incredible Crypto wrote, as expected with a log growth curve, time elapsed from peak to peak is expected to increase, while return on investment from trough to peak is expected to decrease. The implications are as follows, assuming the low for Bitcoin is in at $3,100. And so I'll just highlight it. For those of you who can look at your screen, it's worth doing so right now, or else this is going to be not as easy to interpret, let's say. So this chart goes back to about 2011. And so here you can see was the peak price of Bitcoin in 2011. And so it looks like whatever the price is over. I can't see exactly where it lines up. It doesn't really matter. But from this peak right here in 2011 to this peak where I'm now circling in 2014, 903 days elapsed, right? So a little less than 3 years, right? Now, from trough to peak, with the trough being the lowest point from peak to peak, the lowest point in between those two peaks is the trough right here where I'm circling right now. From that bottom point to the next peak, see where I'm circling here? From the bottom to the top, that's what trough to peak is. There was a gain of 55,836% for Bitcoin. Impressive, right? And so you'll see as I go through this, there's a point that I've made at many times over the years on this channel, which is that with each subsequent market cycle, you will see that the opportunity for asymmetrical returns decreases. And the easiest way to explain that without going into extreme depth is to just explain that the amount of money that it takes to get multiplier effects, once there's a bunch of money in the pot already, it's more challenging to get even a doubling effect. Which is why I'd say just imagine if you throw down a $20 bill on a table, so the market cap on the table, let's just call it that, is $20. Well, what's it take for that market cap to double? Well, that's easy. Any Joe Schmo out there on the planet could just, not literally, but just about anybody could throw down another 20 on the table, bam, just double. Well, that was easy, right? Because there was only one participant before it. Now there's two. What's it take to double that? You know, throw down 40. Pretty much anybody could do that. But it gets to the point where if you've got trillions and trillions and trillions of dollars invested into an asset, in order to double that, you have to have trillions and trillions and trillions in a higher market. Like it becomes more difficult is the point, right? And so this perfectly illustrates that concept that I've been communicating for a number of years at this point. So now if you look at the next market cycle, so here's the peak after that 55,000% increase roughly. From that peak to the next peak, it took 1,477 days. So much longer, because again, from peak to peak for the previous market cycle, 903 days. Now from this one, where I'm circling, to this next peak over here, 1,477 days. Now, if you look at trough to peak, which is the bottom of that cycle, to the top of the cycle here, where I'm now circling. This is why I keep saying, I'm sorry, you guys, you're going to have to look at the screen. I know you don't normally for Moon Lambo videos, but it's useful in this one. So again, from the bottom here to the top here, the gain's still incredible, 12,537%. But nowhere near what it was for the previous cycle. The previous cycle is 55,836%. Then the next cycle, only 12,537%. Folks, again, the easy way to explain it, without going into more detail, there's more money already in the pot. To get it to double or triple, quadruple, so on and so forth, it's more difficult. So that means that for the market cycle we're in now, you're going to see, even though the dollar amount becomes substantially higher, the percentage gains are going to be even less than that. That's a virtual certainty. Seriously. And so here you can see we don't have the endpoint for this market cycle. And so peak to peak, he's got a question mark here. He's guessing. Is it going to be 1,939 days maybe? He's guessing. And mind you, this is back in April, and there's less data, there's less clarity, and he's kind of gotten a bit more precise in what his expectations are over the years, so don't hold him literally to what it is. He's just working with the data available at the time, operating in good faith, and when he's wrong, he admits when he's wrong, which is something that I appreciate, because that means he is intellectually honest, which is something that I value above all else when I'm communicating with people in crypto. If people can admit that they're wrong, then that builds trust from you. If you can say you're wrong when you're wrong, then I'm going to trust you. I'm not going to think that you're worthless and think, see, you're wrong about it. No. Unless you're wrong all the damn time, then maybe. But if you're just wrong here or there, well, we're all wrong. I'm wrong sometimes, of course, we're human. But here you can say, so his expectation, From peak to peak, 1,939 days perhaps. And then from trough to peak, so the bottom portion of that market cycle to the top, he's guessing what would it be? 4,000 to 5,000%. Now that's still incredible, 4,000 or 5,000% gain, with Bitcoin maybe going, over 100,000, maybe 200,000, whatever it would be. But that 4,000 to 5,000% gain, that's less than 12,537%. And so all of this applies to XRP. All of this applies. There's way less money in XRP than Bitcoin. So in terms of since it's a smaller pot, in terms of an opportunity for asymmetrical gains, XRP outstrips Bitcoin. XRP, when this is all said and done, I believe this market cycle will have tremendously outperformed Bitcoin. Tremendously. But you've got to let the full market cycle play out to see that. And so we don't know for sure, but I think that's highly probable. So I'm not telling you to buy or sell or hold. I'm not pretending to be some sort of wizard. I don't know. I'm not making a price prediction even here. I'm just saying that would be my general expectation. We'll just have to see how it plays out here. But given that there's so much less money in XRP, and given that the market moves in tandem, it's a reasonable expectation to think that XRP is going to substantially outperform Bitcoin. And so when you consider all the dynamics, there are reasons that Credible Crypto for years at this point has been calling for XRP, this market cycle, to top at $20 to $30. Those are his expectations with this. And so we'll see. We'll see where it tops, but that's what he's thinking is likely to make sense here. And this is called years in advance. So it'll be interesting once we have all of the data. Once the cycle's done, it will be extra interesting to see who was the most accurate, which becomes more and more clear as each day passes. He's leading at this point. There are a number I'd consider leading, like blockchain backers up there. I shouldn't even start naming names because I'm going to stop there actually, because I don't even want to get into this thing where I'm naming names and forgetting people. I shouldn't have even named a second name, to be honest with you. There's all sorts of analysts out there that are up there. We'll just have to see who ends up being the most correct. But I'm just saying that these calls were made years in advance, and I think that this is probably... And so mind you, he's been correct about the lengthening market cycles. I think it's undeniably the case, because certainly for altcoins, it's been more than 4 years, right? Since we saw altcoins pop off. Yeah, there's been a few, fine. But the vast majority, and I mean almost 100% of altcoins in existence, because there are over 17,000 now, the vast majority have not popped off yet. Now take a look at this. Some additional evidence that money be flowing into Bitcoin. Here's Willy Woo, an analyst who now has 979,000 followers, and shared this. And he wrote, "I guess Bitcoin is in demand lately." And this is exchange net flows. That's what this chart is labeled. And so this is showing the top line is the price for Bitcoin, even though he's not got it labeled. I recognize it, obviously. And then this bottom chart would be the exchange net flow, because that's the only other thing that could be. So you're talking about money in or out of exchanges. Here it's showing that money is flowing out of exchanges. Okay, well, what is typically going on when money's getting off exchanges? That means people are not as interested in selling at that point. So that's an on-chain factor that you can consider. How much Bitcoin is moving out of exchange wallets? And here you can see a lot has been moving out lately. It's just one thing that you can consider. And then he wrote this, probably institutional money. And then he shared this chart titled, "Coins Moving to and from Whale Holders." And it's interesting, as the price has gone down, you can now see that they be buying. All right, they be buying. Which leads, this is a perfect segue into this now from the Daily Hodl. Are Bitcoin whales buying the dip? On-chain analyst Will Clemente says, new trend emerging for large Bitcoin investors. And again, the purpose of me highlighting this is to just illustrate the point that this is not how we saw investors, other market participants behaving as everything was going to hell in a handbasket in early 2018 after the Bitcoin bubble had popped. This is not what we were seeing. So it's just another thing to consider. Technical analysis still matters. Fundamental analysis barely matters, but it's a factor. And you've got on-chain analytics here to consider. So take a look at this. On-chain analyst Will Clemente has identified a new trend emerging for Bitcoin investors that could signal a change in Bitcoin's market structure. In the latest Blockware Intelligence newsletter, Clemente says that Bitcoin whales, or entities with more than 1,000 Bitcoin, have finally started adding to their balance after months of selling. And here is a quote. "Whales had been distributing since September, but it seems that this week they are finally adding to their holdings. A very interesting trend to watch for continuation over the coming weeks." And this blue circle is where he's highlighted there's an uptick right there. Now, in addition, Clemente says that the bigger players in the market are dominating Bitcoin's transaction volume and have only been gaining a bigger presence since 2020. And here's another quote from him. On a side note about large market participants, large transactions are currently dominating volume. This is a trend that has been growing for over a year now. Since 2020, the big boys are here, and their share of transfer volume is only growing. This is also likely a reflection of transaction batching becoming more popular with exchanges. And so, I don't know the specifics of why there would be transaction batching. I'm not sure, but that would just be a number of accounts consolidating into one main account and then moving that, so it makes it look like there's, well, it would be literally the bigger quantities of Bitcoin moving all at once. So fair enough if that's the point. Now, I don't know what the technical reasons would be, the benefits. I will trust that makes sense if the exchanges are doing it. But that's a valid point that he's brought up here. Some of this could be something other than just whales moving around. It could just be exchanges that have pooled a lot of the Bitcoin into one wallet and then make a move, and then people are picking it up because it's a public blockchain and you can see it. So that's what he's pointing out there. And then there's this from Bloomberg. Goldman says crypto mainstream acceptance may not boost prices. And so I saw that, and I even tweeted this out. I shared the article and wrote, it says, if they don't believe that supply and demand dynamics are a real thing in open markets. Economics 101. Geez. And so I just want to cover part of this, because part of the point that they're making I'll agree with, but to make an assertion that mainstream acceptance won't boost the price of cryptocurrencies doesn't make a damn bit of sense. It's supply and demand in the end. And we've been seeing it for 13 freaking years despite pullback. And so the argument they're making has to do with correlation of the crypto asset class to other markets, including equities. Anyway, so the piece reads as follows. I'm just going to cover the top part because otherwise it gets redundant. Anyway. Investors should be skeptical of the narrative that rising adoption of cryptocurrencies must translate into higher prices, according to Goldman Sachs Group, Inc. As tokens like Bitcoin gained wider mainstream appeal in the past couple of years, their correlation with other macro assets has increased to where crypto is now at the center of recent rotations across asset classes. Goldman strategist Zach Pandal and Isabella Rosenberg wrote in a note published Thursday. That flies in the face of cryptocurrencies as an ideal tool for diversification. Look, I've been saying on this channel for years that, and it's true, it's verifiably true, and so they're correct on part of this. These asset classes are correlated. They're correlated. So for the biggest of moves in particular, look back to March of 2020 when the pandemic was kicking in. Yeah, so equities plummeted and crypto moved in tandem immediately with it. It responded immediately. So yeah, there's a strong correlation. And that was just one anecdotal incident I'm citing, but it goes back for years and years. And this is provably the case, right? So I'm not disputing that. But to say that flies in the face of cryptocurrencies as an ideal tool for diversification, well, look, I'm not making the argument that this is being treated differently as if just because it's some sort of hedge against inflation or tumultuous times or store of value. I'm not making that point. The point that I am making is that as market participants continue to jump into the space, there's so little money in this damn asset class that it's just a supply and demand thing. So fine, yes, for the big moves, I get it. There's this strong correlation. Totally agree with that. But what happens during the biggest of moves? Well, it's not uncommon to see cryptos go up thousands and thousands and thousands of percent. So even if you're seeing an up move for the stock market and crypto at about the same time, the percentage increases in crypto are they're dwarfing the increases for any other asset class, including stocks. So to state it doesn't make sense to diversify in crypto because the rewards won't be there, it completely abandons economics 101 facts of just the nature of how supply and demand works. Completely nonsense, and it's coming from Goldman Sachs. What in the ever-loving hell? What in the ever-loving hell? It's amateur hour here. So anyway, I'm going to go ahead and wrap it there. I am not a financial advisor. You should not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.